Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on USMJ. We did Canadian MJ video yesterday, so check that out if you have not. Want to touch base on that a little bit first, just some response to some comments, as there were some good comments, so I want to highlight them. The first was someone pointing out what they feel are the three tiers of the Canadian companies to be watching. Obviously, we have tier 1, which is the major names that we cover: Canopy, Afria, Aurora, Kronos, and Tilray, I guess, is in there as well. And they were pointing out that they believe that there's a tier 2, which I can agree with, where they're looking at HEXO, TRST, and OGI as names that have not hit the spotlight. Remember that analogy with the bands blowing up. So they have not hit the spotlight yet, and they have the better risk to reward for short-term, mid-term gains, which is entirely possible. So that's definitely something to be keeping an eye on with those names who have not reached that tier 1 status at this point. Another point from another viewer was that the institutional holdings in these tier 1 companies are not significant yet at this point. And that is true. And they were comparing them to, the major names like Apple and Netflix, and certainly don't anticipate institutional money to be anywhere near those levels of those major lead tech sector names in the MJ space. But their point was that the U.S. institutions are holding off to a certain degree because the laws in the U.S. have not shifted to be favorable for banks and for institutions and things like that to be working with marijuana companies. That's a valid point as well. But my point still stands just in terms of risk to reward, or I should say the potential gains and more bang for your buck in the short term. Again, time is very specific and significant for what I was talking about. So can these tier 1 names go multiple 100% in the next few years as earnings start coming in? Yes, absolutely. In my opinion, the hype has already hit those names and has already put them to tier 1 status. And from now, it's going to be the earnings and consistent growth and hopefully strengthen the overall stock market, which is going to see those names continue to accrue in terms of value. In terms of short-term percentage gains, looking at 2019, who has the most opportunity for those percentage gains? Again, just going to reiterate my point, the small cap US names who are not dual listed, the tier 2 names that other person posted about, and even the tier 3 names in Canada that are very small cap and very illiquid. So yes, institutions have not blown these names up, but I don't anticipate, unless there is a significant change in a law that allows institutions to suddenly, pour in, which is a possibility. But even then, my opinion still stands that percentage gains, if we see the major tier 1 names run 20% in a month, I would expect that the tier 2 and tier 3 names will run, 40 to 60% in that month. So that's just my opinion. It's fine if you don't agree with it. But for traders like myself, short-term traders, not investors, I'm going to be looking at the names that are going to move more significantly percentage-wise. And at the top of my list, I want to see blue sky breakout. That's ideal scenario for a trader to be in. I'm sure everybody remembers how easy it was to make gains back in 2017, 2018, when we were seeing blue sky breakouts. So any name that is close to a blue sky breakout instantly has my attention, more so than the vast majority of individual names as a short-term trader. And we're going to look at one of those here in just a second. So this is a compilation of US names. There's certainly other names out there. Again, this is just me going over major Canadian names, major US names, and then we've already started working with the Chart Guys community and members who have been contributing. Thanks very much for that. But compiling, our top watch for January, essentially, with names that are in nice tight ranges and set to break. So we're going to start it off here with TRUL. And again, all of these tickers have a Canadian ticker. Shouldn't say all of them. Most of them have a Canadian ticker and a US ticker. So if I'm looking at TRUL, there's a US ticker that is up to you to check out if you are interested in the US side of things. But sticking with where there is more liquidity at this point, which generally is on the Canadian side of things still. So we're going to start on weekly timeframes. And for the vast majority of individual names, we are still in weekly lower highs. So for TRUL here, we've seen a decent bounce from the low, 910 up to 1110. That's a solid 20% bounce in 2 weeks. But again, if we don't see any kind of move over 1749, which isn't going to happen anytime soon, this bounce is just looking to set lower highs on the weekly time frame. The cryptocurrency space is doing the same thing. We consolidated, and much longer than this, we consolidated all of 2018 in the cryptocurrency space. We're patiently waiting for weekly trend changes. The market has been bouncing for the last 2 or 3 weeks in the cryptocurrency space, but it's just a weekly lower high. So we know that we need a higher low and a higher high to change any trends, and that's going to take another couple of months to develop at the least. So short-term resistance, if we zoom into the daily time frame, is going to be the top of the bounce at this point, and that's a little bit of a wall of resistance at 1150, essentially a triple top at that level. And you can see even a quadruple top back here, 1140, 45, 50. If the bulls can get over 1150, the next resistance level is 1193, and after 1193, there is a lack of resistance to 1375. So if we see a volume spike on a break of 1150, we can be looking for the potential of some further upside. There's some fundamental news to be watching with TRUL, some lawsuit to be watching. So check out the fundamentals, of course, if you are doing anything more than just short-term flipping. And again, as I said earlier, we are heading into earnings season. KSHB, which we're about to look at, has earnings this coming week. Most names are not going to have their earnings until February, March. But again, it's always worth being aware of when the names that you're watching, put it on a piece of paper, put it on your desk. That'll help you from forgetting when those earnings are. So key support in the short term, 11 psychological. If we break 11 psychological, let's look at the hourly time frame. So 11 is what the bulls are trying to maintain the hourly uptrend with. If we break $11, it's 1088. And then 1060 is the next two levels to be watching. You can see we're getting very tight here, and it looks like an $11 support test may be coming on Monday. And if that breaks, that indicates the daily consolidation is going to be coming here to try and form a higher low. At this point, we have not changed the daily trend. This is a bounce off of the lows. We still need the higher low and then higher high to confirm the trend change. SPY and the S&P 500 just did that on Friday. Higher low was set Thursday, and then we got the higher high Friday. Hasn't happened on some of these individual MJ names yet. ACRG. So this is one that's going to absolutely have my attention because of the lack of price history and because of the potential upside if we get blue sky breakout all-time highs. So we've got our high, low of the pullback. This is one that's going to be a weekly equilibrium setup. We're absolutely going to anticipate a lower high compared to 2690. At this point, this is still, about 18% from where we currently stand. In order to break that resistance to all-time highs, what I want to see is a lower high on the weekly, a pullback to a higher low over a few weeks, and then a bull break. And then we would look for an entry on a break of the lower high, and we would anticipate that the odds of a new all-time high coming in the near-term future, if we break that weekly lower high, would be likely. So again, not saying we've topped out just yet. We need to look at the shorter term details, but let's say we top out, we get a higher low at $18 and then a bull break. That's the bull break that's going to have us look at all-time highs. So the daily time frame, significant bounce. We're going from $12 up to 23, almost a 100% move over the last 9 trading days. And again, I don't think we're ever going to see CGC go 100% in 9 trading days without massive news that would surprise all of us, in my opinion. So we have a short-term support level to be watching, 1690. You definitely need to be aware, again, liquidity. The reason that these names can run so significantly is because of how illiquid they are. And it's also the reason that we can see 10 red days in a row and a drop from $19 to $12, a pullback of 35% with 10 red days in a row. It's illiquidity and a lack of liquidity that allows for that. So just be aware. I mean, the price here, the low was down at $16.90. The high was $20. It's a 15% range on that day. So you want to have your position size reflect the amount of volatility in these names. I would never put the amount of dollar volume or the amount of dollar position that I trade with CGC in a name like ACRG because of the wild swings in volatility. Maybe I would if we're in blue sky breakout and I want to hit a home run, but that's not the current market environment that we're in. So the hourly uptrend on ACRG, anything above 1998 is a higher low on the hourly. Bulls comfortably have the uptrend. If we lose the hourly uptrend, we zoom out to the daily and look for healthy consolidation. And again, at this point, my focus is on the weekly time frame for this name because of that most likely clear equilibrium setup. If this was increasing bull volume from last week to this week, and I know we did have a holiday thrown in there as well, but even then, not very significant volume compared to the bear volume. If it were increasing volume, then I'd say, hey, maybe there is a chance that we just see a V-shaped recovery to all-time highs. But because that volume is not standing out and it's nothing impressive, that only adds to the fact that it's more likely that we form a weekly equilibrium with this name. MedMen, MMNFF, weekly time frame is a bit of a different setup here because we have a low, we have a high of the initial bounce attempt, which was just a weekly lower high. We pulled back for a higher low, and now we're at a key resistance test of 478, which is a double top. Not surprising we rejected from there initially, but if we break 478, there's a lot of space on this weekly time frame for the bulls to follow through with. And here we've got the daily time frame, 478, 495, and 528. And this is a daily trend change and a weekly trend change trying to take place at the same time. Again, at this point, I would rather see a rejection and a higher low form because the tighter, the better in terms of the amount of follow through we can anticipate when breaks do occur. If we do break 478, we'll get some follow through for the bulls. But again, it's worse risk to reward for an entry already seeing this significant of a bounce than it would be if we take a breather for the bulls, establish a higher low, and then get a bull break. So very tight range on Friday, and key short-term support is 450. If we cannot break 478 and we break 450, then we know that's a clear double top rejection, and we know we have further consolidation on the daily to give us that tightening equilibrium coming up. CWEB on the weekly time frame, also a significant bounce. And I like this equilibrium shape here where we have our low, high, higher low, lower high, higher low. Let's draw these out so you can follow along. Almost a double bottom, just held support, lower high, higher low is now at 1228. Anything under 1682 is just a lower high. That's a key resistance level to be watching. We're a bit extended. Again, daily time frame at this point, if we make a break of 1682 this coming week, we've already seen a 50% move into that bull break. I will be much less likely to play that bull break. And it's not just 1682, it's 1694 right behind it. So I would almost rather default to 1694 there just because of a triple top essentially. So let's call it 1694 as the key level. If we pull back without breaking 1694 and look for a daily higher low, we have a continued tightening range and the risk to reward will be better for the bulls who are currently sitting cash if we get that further tightening consolidation. Lose the hourly uptrend and daily consolidation will begin 1529, and that's the most important short-term support, a little double low of 1532 and 1529. But bulls are still strong here at the end of the week this past week, all about 1694 resistance. So again, a way that I keep track of all these names, it can be overwhelming. Canadian, US, we got 50 tickers to be watching now. Piece of paper on your desk in front of you. I would write down CWEB 1694, and that would let me know if 1694 breaks. That's a key technical break, and if it doesn't break, then we have the daily equilibrium to be watching into later January. KSHB earnings are the 8th. That is the Tuesday, I believe. This is one where we made a bear break, and it was extended to the downside with the weakness in the S&P 500, but the bulls are attempting to turn that around, and they've made a massive bounce at this point from 437 up to 579, so essentially a 35% bounce in just a couple weeks. The resistance is $6, and it's $5.99, but we're going to call it $6 because that's psychological level to be watching. And this is another one where I would rather see a rejection and a tightening range because the last thing I want to be doing is entering a bull break of resistance after we've bounced 40+%. So bull's still extremely strong. That volume is picking up a bit here. All about $6. If we lose the hourly uptrend without breaking $6, then we're going to look for daily consolidation. First support is 566, 560, and 548 with these little higher lows on the hourly. And it's all about $6 this coming week. I'd love to see an inability to break $6, a pullback to the mid $5 range, and that's the psychology of a cup and handle pattern if that were to play out. Inability to break resistance, healthy consolidation for a handle, which would be a potential little bull flag on the daily, and then a bull break over $6 to be looking up at 670 is the next level after that. KSHB definitely has my attention, and we're probably going to see the reaction to earnings dictate whether $6 breaks or whether we reject from it and have to pull back into the low $5 range. NBEV on the weekly time frame, higher low established is 471. NBEV has had the most impressive last 3 months of trading for the bulls. Very clear uptrend. From 3, we ran over 100% from our low of consolidation, and right now this is the range to be watching in the start of 2019. 471 support, 690 resistance. The daily time frame is a fairly weak bounce. The big upper wick shows profit taking and an upper wick on Friday, so it's a tightening range with a daily inside bar, and essentially I'd like to see a little bit more follow through and then a pullback. Again, you know I like tightening ranges at this point, and on the hourly time frame, here's our equilibrium. So if you want to watch the hourly equilibrium here, we would be looking at 535 and 525 as supports, 565 and 585 as resistances. And that's something to be watching short term for NBEV. But again, my focus on the sector as a whole, aside from some short-term opportunities with nice tight ranges, is these weekly timeframes. I want to see clear shifts in momentum to the bulls on the weekly timeframes to be comfortable bullish in this sector. Always want that trend in our favor. CVSI and NBEV did have a hit piece out on them worth reading and doing some of your due diligence on, unless you're just trading it. So here I'm looking at 654 key resistance, because if we get over that level, there's a lack of resistance on CVSI. Our low of the weekly, lower high, higher low. So here's another tightening range. Key support is 380 and key resistance is 560. If we pull back and cannot break 560, we'll look for this weekly pattern to tighten through January into February. And the daily time frame, profit taking day on Friday, big upper wick, and we are looking at losing the hourly uptrend if we break 456. So we broke it by a penny, but if we break it more convincingly, the daily time frame will be due for consolidation. That will be our weekly lower high likely being set, and then it's up to the bulls to hold 380 support. IAN, also a weekly equilibrium. Low, high of the bounce, higher low, and if we cannot break 648, we're going to look for this weekly pattern to tighten through January into February. Daily time frame, bulls still in control of this bounce, 475 up to $6. Very significant 20-25% bounce. The hourly uptrend, key support 584. If we break 584, the odds that we're going to see, just ruin that. If we break 584 support, the odds that we're going to see daily consolidation will increase fairly significantly, and that will give us a real nice equilibrium to be watching into the end of the month. MPX, so we're still waiting on the deal, and you can see how similar the weekly chart for IAN and MPX is here. Same little equilibrium, and we're looking for this deal to potentially go through Q1 2019. I haven't done the math in a little while here, so I can't give you the exact discount on MPX shares, where if the deal goes through, MPX shareholders will get a little bonus. But at this point, it's all about resistance of 98. We rejected from 97, and if we lose the daily uptrend, we're going to look to pull back on the weekly for a higher low. But at this point, that daily uptrend, and really I wouldn't say losing the daily uptrend, let's just call it a double top, and if we lose the hourly uptrend, key support of 93. If we lose 93, we're going to be looking at a pullback for a higher low on the daily and a really nice tightening pattern. And again, we look at IAN, very similar, but less close to a resistance break. We would need essentially an 8% break from the top of this bounce so far, 8% continuation to get a bull break, whereas MPX only needed 1 more percent, just over 1% to see that bull break. So we got closer to a resistance break on MPX, but the charts are very similar. One more here. Let's wrap it up with IIPR. Forgot about that bad boy. Weekly time frame did get a little lower high and lower low here, and do have to be cautious of a head and shoulders pattern. If we bounce and then top out in the low 50s and then roll back over, that would be a big red flag. But at this point, we don't have much of a bounce going right now, and the correlation with the S&P 500 isn't very strong or convincing. So right now, key resistance is 4702. If we break 4702, there's a lack of resistance immediately nearby. But again, I would be expecting a weekly lower high to form compared to 5398. And again, that opens up the opportunity for that being a potential right shoulder, which is not ideal for bulls, obviously. So less interested in IIPR. Dividends paid out. It's a longer term hold potentially. One concern I do have fundamentally is that if there are law changes, if marijuana is removed from Schedule 1 in the US and the banks can get involved in the sector, IIPR's big, bonus for it as a company is that it's acting almost as a little mini bank for, projects and grows. And if banks can get into the sector, that diminishes the allure of IIPR a little bit in terms of what their business model is. Not going to put them out of business, but I could potentially see that being a bit of a bearish, really the only stock in the sector where that might be a bit of a bearish development. So that's where we stand. There's opportunity approaching in terms of these tightening patterns. Again, when we have these tight patterns, the more traders recognize them and the more act on that break, that's when we get the significant follow through. And that's when the bulls can consolidate, take a breather, recharge, and then look for follow through. So it's getting to be a little bit exciting in the space again. We're watching for these weekly timeframes. Can they change the trends? It's been a long, drawn out consolidation. And seeing the correlation with the S&P 500, it's still there without a doubt, but it's weakening to a certain degree in the sector and going to be continuously monitoring that as well. So establish a game plan. What names are you watching the most for potential investments? What names are you watching the most for trading opportunity? Keep that list in front of you on your screen. Have a good day. Have a good weekend. Do a good thing for someone out there. We'll see you soon.